we are watching some key industrial names, in particular General Electric and 3M. Both of those companies beating estimates and raising guidance. GE getting an extra boost as it announced it is spinning out the aerospace business. That'll be the remaining piece of GE, right? Vernova is going to leave the company as of, they're targeting the second quarter of next year. Their 3M also sort of lapping some legal costs that it had in the past and trying to push past that. And the CEO of that company, of 3M, talking about momentum through strong operational execution.
Yeah, a couple of one is GE's having a nice pop today, but it's been a nice year. If you've been in GE, that stock has roared more than 70%. But I think part of the story, listen, raised its forecast for profit and free cash flow. Investors love hearing that. That's always a good one. Big story here, though, too, is more air travel means good news for its aerospace business, right? And, of course, GE makes those jet engines, makes the power generation equipment. Citi telling their clients GE is well-positioned for continued healthy results, and investors clearly like what they sell here today.
Yeah, and conversely, when it comes to 3M, that company focusing on cutting costs, and those shares have gone down this year, unlike GE. So a little bit of a relief, perhaps, today from those numbers.
Exactly. Not great, but enough to beat, and that's saying the shares higher.
Yeah, exactly.
All right, let's also check out shares of another mover here, RTX, formerly known as Raytheon, defense giant, reporting better than expected results. And the news, Wall Street is really liking a $10 billion, that's with a B, dollar share buyback. So this one also an interesting mover today. So profit beats, Julie. Company announced that big buyback. Company, remember, did announce I guess these engine flaws over the summer, if you remember that headline. And the jet engines needed inspections for possibly, I guess, problematic components. And that was going to impact Airbus. But the CEO saying that the expected financial impact is going to be in line with the previous disclosed range. In other words, no new news. And I think that's part of what you're seeing today.
Yes, he had talked about a charge that the company was going to take $5.4 billion in a pre-tax charge because of those Pratt & Whitney engine flaws. So as you say, that being in line with estimates, the company's Raytheon unit, it still has a unit that I guess is called Raytheon, which is Missiles, Defense, and Space. There it had 3% sales growth here. And the company's Collins Aerospace had sales growth of 17%. So it did have some areas where it did see some strength there. But, you know, sort of like 3M, there was a bit of an overhang situation in this case from those engines, those Pratt & Whitney engines. And then let's round out sort of the biggies that we were watching today. Another Dow component that we've been keeping an eye on is Verizon. The stock on track for its best day since October of 2008. And that's after the telecom giant reported better than expected results. So I think when we look at these companies we've been talking about, if there's a through line here, it's sort of legacy companies, right? And, you know, maybe relief being expressed in a number of different ways for these companies. In the case of Verizon, what we've seen from it and from AT&T is better than expected growth, or at least smaller than expected losses, depending on the types of customers that we're talking about here. The company added 100,000 mobile phone subscribers, which is better than estimated, although a lot of those gains were business customers, interestingly enough.
So it's a nice, I mean, listen, that's a big move on today, but for year to date, it's been tough. I mean, that stock is still well in the red. Q3 earnings beat. They also raised guidance for the year, looking for free cash flow now, it looks like above $18 billion. But as you said, added net 100,000 mobile phone subscribers. That was led by business. I did hear some folks saying, though, that perhaps implies Verizon is no longer at least shedding market share. That's how they interpreted it, and I think maybe that's how investors are seeing it, too.
Yeah, a couple of other quick notes. The company has been raising prices, right? There was sort of a race to the bottom in terms of the phone carriers offering discounts. That seems to have reversed, at least in part, with these companies raising prices. And remember, also, Verizon spent a lot on its 5G build-out, and that didn't necessarily bear fruit, although maybe there's some early signs of that at this point with those subscriber gains. We'll see.
Investors likely to see at least today.
Yeah.